I've certainly missed the Indian market. I'm embarrassed because I've invested in India many times in my life. And here finally, Delhi has the right attitude, and I missed it. I watched it, I see it happening, but I've missed it. And as far as I'm concerned, I don't like to jump on a moving bus. If you jump on a moving bus, sometimes you get hurt.
The relative attraction of India is, there are two sides of the coin. One is that India is doing very well. I don't see that changing. But the other side is that the U.S. is doing very well, and you need to see the U.S. do less well. I don't mean go into a bear market, but I just mean stop being the really incredible bull market that it has been for the last 10 plus years. For interest to broaden out to countries like India.
India is growing at 8%, therefore high price earnings ratios is justified in India because the E of the price earnings, the E is growing at a faster rate. So looking at these two countries, yes, there will be opportunities in China, particularly now the market is down, and we're looking at some of the Chinese companies. But at the end of the day, growth is where it's at in India, and that's where we want to be.
Our feel is that given the kind of fundamentals, or rather the June quarter results, and even looking at the March quarter results, the fundamentals are somehow not supporting the kind of rally that we're seeing today. So maybe you'll see us, somewhere flatlining at this line, this point, and probably doing a time correction going forward.
There are many low-floating stock counters where valuation looks unreasonable. There's a momentum over there, and you are unlikely to make money over a longer period of time. But at the same time, there are many good companies available at reasonable prices. It's not a cheap market.
In India's case, generally the earnings have done pretty well. And it's been a very broad-based economic rise of at least the stock market in terms of the various sectors have done well in India. So that way it seems grounded in the reality that the economy is moving in the right trajectory. But of course, it's been amplified by the fact that you've had this trend of financialization, which is that people in India hardly owned any equities, and now they've become used to pouring money into equities at every dip, every month. So that financialization that's happened is what has led to India now trading at a big premium to other emerging markets.
Clearly, from a short-term perspective, I think market has reached a level where valuations have become elevated, and they have remained elevated for quite some time. On top of that, what we have seen during the first quarter of this earnings season is also the EBITDA growth as well as PAT growth, the Nifty basket has been very, very tepid.